All right, we are live. Top Lenders in America with Brett Wilmer from Nashville, Tennessee. Glad to have you here. Really excited for today. And
Yeah, thank you for having me.
we met through a mutual friend, Derek, and I trained jujitsu with him. And it was funny. I was trying to connect him with my lender, and I was like, "Who do you use?" And he was like, Brett. And he told me like how you met him and everything you do. And I was like, all right, I got to meet this guy. It's absolutely awesome how you communication is 100% of it. You got to do the rest, be a professional, and everything you do is top notch. And could you just share like a little bit of your process to make sure that clients get what they want without surprises?
Yeah, because that's one of my good buddies had the best line, and I stole it from him. He said, "Surprises are for birthday parties, not real estate transactions."
Yeah,
Which I was like,
I love that.
golden, fair.
Yeah.
So my process, maybe not all that unique from a ton of folks, but what I always like to do is just do an initial consult, right? And just talk to the client, understand their particular situation a little bit better, understand their concerns, answer their questions before we even get to an application, as just talk about it and look for potential pitfalls and issues. So it automatically sets my mind going in the right direction of, okay, we're probably going to go this route, answer any questions that they have, explain the process. Especially with first time buyers, we're seeing a lot of first time buyers come out nowadays. From there, go to the more formal application so we can start working on the pre approval and everything else. And that's where most lenders stop typically, is they get that pre approval, they say, go find a house. I like to go one step further with all my clients. Time permitting, as long as we can, we get all the files into underwriting in advance. Difference being in doing that, it gives peace of mind to the buyers. They know they're 100% approved for the loan. Speeds up the process, right? So if it is a multiple offer scenario or something where we just have to run quicker, we can do it. And the third reason, probably one of the biggest, is it makes the offer better, right? If you're in multiple offer scenarios, it's a stronger offer because we can turn in an actual underwriting approval. So even from the very beginning, I try to structure things that way. And then throughout the transaction, there's a lot of patterns and behaviors that I do as well.
Yeah. And when you get a weekend from closing or whenever, and the underwriter comes back and says, oh, we found this, we need this, you've already done that instead of into the deal.
Exactly. We try to get everything as bulletproof as possible from the start, right? So
Yeah.
there's no surprises. And honestly, it just makes it less stressful for the home
Right.
buyer, right? Because buying a home is stressful. You're moving, you're doing this, it's the first time doing that or whatever, right? So anything that we can do to simplify it for them and just make it a more enjoyable experience, not freak out mode, it just pays off in dividends. It's huge.
Right. Yeah. My clients, especially first time home buyers, the question they'll ask over and over, like, is this am I qualified yet? When do I know? Is this going to close? And to be able to be through that, I'm able to say, hey, look, I've had clients work with my lender for 10 years. And if we get to this stage, it always closes. So you can just relax about that. That's huge. Like you said, there's no
Yeah.
surprises there. You don't have to worry about, I know I shouldn't, but I call them the evil underwriter. It's like the wicked witch of the West. They're just doing their job, but it's nice to just get through that big hurdle. Sometimes it's a big hurdle. And don't worry.
Exactly. And things can pop up.
Right.
Yeah, things can pop up throughout a transaction. That's not uncommon. Sometimes there's just stuff that you can't control, but being able to catch that stuff in advance so that you have enough time where it doesn't affect the transaction and people aren't stressed out. So that's a huge thing, right? So even for me, for example, I send out weekly updates on every transaction to both agents involved or all the parties involved on every Tuesday. So folks know what's going on. And then as we hit major milestones, I send out those updates, right? Hey, the appraisal's in, we're clear to close, docs are at title. So everyone knows throughout. And I think when there's open lines of communication and transparency like that, everyone's a little bit more at ease, right? The sellers, the listing agent can tell their clients that. It just makes it easier.
Yeah. 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 As a listing agent. And that's how Derek connected with you. He had a listing. I think it was actually his house, and you were representing the buyers.
Mm-hmm.
And you called him every Tuesday, and he was like, this is a breath of fresh air. And
It
well,
is. It catches. Okay.
one of my kids is
Sorry,
down here.
Charlie. I was. Hi, buddy.
Say, hey, Brett. Hey, head on upstairs,
I've got
okay?
two dogs underneath me, so I get
Yeah.
it.
Um, and
But it does. It catches agents off guard sometimes because they're like, "Whoa, why is this person communicating with me so much?" But it's a great way to do business. It's more work, yeah, but it's good work.
yeah.
So it's
And
worked well for me so far.
yeah. And so, how long have you been in the business? How long have you been here in Nashville?
Yeah, I've got an interesting background. I've been in mortgage lending for a little over 15 years. I've been in Nashville for, I believe, 11 or 12 now.
So, you're
Originally from the
basically a
East
native
Coast, but I
now.
was in music. Yeah, essentially by current standards, right? I've been here long enough, the past decade, all the changes, but it's a great city, man. We're never leaving.
Yeah. Yeah. Yeah, I think it was you. I think I was looking on your Facebook page, and is it true I saw a picture of you when you were in music? A picture with you and Slash. Is that was that real?
Yeah, the band I was in at the time opened for him, and I love Slash. He's one of my favorite guitarists and idols. I'm a guitarist myself. And so that was just a really cool experience being able to open for him and some of my other idols. Yeah, just a really cool aspect of my life, a part of my life.
Yeah, and you still did loans while you were traveling or while you were in the band. Some is that right?
Yeah, 100%. I got into mortgages pretty young. I started playing music out when I was about 16 and went to college and kept playing music and doing all that. And I got into mortgages shortly after college. And yeah, so I'd be, in the back of a van or waiting at the airport or on a tour bus or whatever. And during the day, crunching numbers and quoting interest rates and go play the gig at night, get no sleep, wake up, do it again the next day. So it was a very interesting time in my life. It was a lot of fun. I wouldn't take it back.
Yeah, yeah. That's one of the ways we connected. One of my best friends, he lives up in Philly, and he did the same thing for a number of years. His mom was in real estate, and he became a realtor. And then when he started touring, he switched to loans. He did that for a long time, and now he's got kids, and he does that full time. But how cool is that you can actually still be on top of it and do that?
Oh yeah, and that's one of the great things about the mortgage industry, in my opinion. If you've got cell phone and laptop, you can work. I could be in Spain right now. You wouldn't know.
Right.
Doesn't matter. most things are 100% remote. Typically, it gives you a lot of flexibility. It's a great industry in that aspect of things for sure.
Yeah. And what switching to clients, and we're in I guess you would call it a pretty unique. The market's always unique. It's always changing. What are you seeing as the opportunities in the market? What are the questions that clients like? You got frequently asked questions, but what are the questions that clients should be asking that maybe they don't know to yet?
Yeah, yeah, great question. So interest rates are always top of mind, right? Especially in today's rate environment, just because rates are higher and they were insanely low, right, during the COVID years, and we had 2% and 3%, and now we're in the 6% and 7% kind of range. So that's the concern for a lot of folks. But I think the main questions and things that there are programs out there that can help with the higher rate environment. There are some first time homebuyer programs. There are some income based programs that offer lower rates than your standard mortgage. Looking at adjustable rates can be a really good option, depending on the loan type. Sometimes they're lower than the fixed rate counterpart, and even temporary buydowns. That's something that we've had in the mortgage industry for a handful of years. We never needed them when rates were
Right.
2 or 3%. A lot of people don't know that they exist. So asking about what other programs are out there, what other options are out there to help reduce my payment, help reduce my rate, that's really going to help folks. And a lot of people just don't know that, right? They're only concerned about what's this 30-year fixed whatever. And sometimes that's the best option, but
Right.
sometimes it isn't, or sometimes there are other options that people just aren't aware of.
Yeah. Yeah. So there's programs for income based and first time home buyers that actually have some lower rates than what you'd see on the website, on the web, where you look at today's rate. That there's actually different programs that drop that.
Yeah, that's definitely something for people to ask about. Other things to ask about is interest rates. locks, for example. If I lock in my interest rate with this lender and then rates go down, what happens? Am I
Right.
stuck or can I renegotiate it? Right. With the majority of our investors, we can renegotiate it. And that's huge because rates have been so volatile. If you lock it 7% and a week later to go to 6.5%, we'll be able to get you that. Right.
That's
But
amazing.
that's a good question for your average home buyer to ask a lender because not everybody can do that. Right.
Right. Right. Yeah.
So I got one of my dogs playing here.
All good. All good. My 5-year-old was just down here. So that's working from home life.
Exactly.
And so how does, so that's because a lot of folks don't know that at any time there's actually hundreds of different loan programs with so many different options you can have. And I guess that's the reason that you have an initial consultation, and that's why you have the communication, because it's not just you call in and get what's default. Like each person does have a unique situation. And I love that you do that. And explain how the rate buy down works.
Yeah. So what most folks are familiar with is what we call points, discount points in the mortgage industry. And that's what everyone thinks of. And a point is what we call a permanent buy down, right? So for example, 1 point costs 1% of the loan and it adds to your closing costs, but it buys a lower interest rate for the entire time that you have that loan. And it's not a one for one exchange, right? So,
Right.
for example, if the interest rate's 6%, it doesn't mean that you get 5%, right? Normally it's maybe a 1/4% lower, maybe a 0.5% lower. And those are really good options when rates are low. You're going to have that loan for 3, 5, 15, 30 years, whatever it may be. But when interest rates are high, and there's a good probability that you're going to refinance in a year or 2 or 3, a lot of times you're not recouping those savings, right? So I'm not a big fan of points at the moment. But the opposite of that is what's called a temporary buy down. Just like it sounds, it's temporary, right? So it will reduce the interest rate a full 1, 2, 3% for a set amount of years, right? And it's not an adjustable rate. That's the fallacy where a lot of people think, oh, it's an adjustable rate mortgage. It's like, no, it can be a regular 30-year fix. But for example, on a 1 year buy down, the way that's structured is it reduces the interest rate a full 1% for a year, right? Or on what we call a 2-1, it'll decrease the interest rate 2% for the first year, 1% for the second year, and then back to the base rate for the third if you still have the loan. And the difference being is that's huge, right? Is instead of reducing the rate by just 1/4%, you may go from 6 to 4%, right? It's a
Right.
much
That's a
greater
big difference.
savings, and then a huge difference in payment. I've worked up somewhere it's saving people $50 a month, $500 a month, substantial savings. And then the other unique thing about them is even if you go with a multi-year option, if you go with a 2 or 3 year option, if you refinance within that time frame, whatever is still in that account, because that money is held in an escrow account, isn't lost like it would be with points. It's a sunk cost from the day one. But with a temporary buy down, if there's still $5,000 or $2,000 left in it, it gets credited to the loan. So you actually are getting that money back if you do refinance. So that's why it's a really cool tool right now.
Oh, that is really cool. I did not know that.
And
Uh,
again, just best use of cash, right? How can
yeah.
I use money the best way possible? It's always thinking of it that way, right? What's more beneficial, right? How can we benefit the buyer? So those are a really good program right now, especially.
That's awesome. Yeah. So you can buy down the rate. And then if the interest rates drop in 18 months, you can refinance
Mhm.
and that money isn't lost.
Exactly. Exactly. That's the main difference between temporary buy downs and permanent buy downs. And same thing, a lot of folks don't know that, right? So they say, we don't want to put this money towards here, but if you may get a portion of it back, it's a win scenario.
Yeah. Yeah. I've got a lot of folks they ask me about the market and what's happening in Nashville and the surrounding areas. And they ask me like, should I wait? What when you've got friends, you've got family clients, like when they ask you about the market, what are the questions that you ask to help guide them on what's right for them?
So that's a really common question, right? Is everyone going, is not only the rates, but what's happening in markets. And it's interesting. It's been a very interesting year and a half in that we've had a decade low of inventory nationwide, right? And I'm personally licensed in 4 states, and I'm seeing it everywhere. My company's in almost all 50 states. So there's really low inventory right now, which there's also a lower amount of home buyers right now because the increased rates, right? But inevitably, what's going to happen is as we see those rates adjust, right? As we see the rates start to come down, it's going to bring more buyers into the market, and it's going to make it a much more competitive situation, right? Where we see folks offering over list again or waiving appraisals, waiving home inspections, doing this, doing that. So my recommendation to folks is get into the home now. Get in, and on top of that, homes are continuing to appreciate. Nationwide, they're still appreciating 4 to 8% in most markets. If you think of it this way, the home that's 400,000 right now in a year is going to be 416 or 432,000. And then if it's more competitive, it's going to be 425 or 450 or whatever. So main takeaway is get the home now, refinance the rate later, marry the home, date the rate, right? The old saying there. And so that's really where I'm pushing my clients, friends, family. Shoot, my wife and I just bought our current home a year ago, and if we didn't spend all of our money on this one, then I'd be buying more up right now. So we're gearing up to get back in. We're investors also. So it's a great time to buy, in my opinion.
Yeah. Yeah. I've been working with a lot of investors here locally, and I talk to lenders and realtors all across the country. And it seems like here in Nashville, we've got something unique in that sometimes we've got multiple offers, but I'm seeing homes that are on the market 14 to 30 days. Whereas in other parts of the country, like my friend out in California, he had a as is 1974 home with a 2 hour open house, and he got 41 offers on it. It was listed at 1.2. It sold for 1.3.
God.
And that's not abnormal across the country. Like I've got friends in Denver, Sarasota, like they're just a house comes on the market and they're still got so many multiple offers. Whereas here in Nashville, and I think it's because we've got every crane in the Southeast, is my guess. We've got so much building going on that we've got this ability where you can actually buy, which is really cool. And people aren't stopping moving from Nashville when you know, I've got clients that are asking the same question. Should I move right now? Should I rent my current house and buy a new house? Because they've got interest rates 2 to 3%. So it can really cash flow and they can get a good deal on the new home.
And that's become much more common is that the folks that have the 2.5% interest rate, the 3% interest rate, they may not want to sell, right? So another tool that we've been utilizing is just home equity lines of credit so that they can pull some equity out of the home rather than selling, list their home as an investment property, get the lease agreement on it, which could offset that mortgage expense. Then on paper, they don't have to qualify for carrying multiple mortgages. We're only qualifying them off the new purchase. They still have that property. They still have a lot of equity in it. Now they're making money off of it as well. So that's great. That's a very common occurrence that we're seeing in our market right now, in my opinion.
Yeah. Yeah. I love that play. Of course, I live in the house that I grew up in. So I'm never leaving this house, but I am looking for, and the power of that is if you buy an investment property, you got to put 20, 25% down, usually something like that. Whereas if you rent your current house and move to a new primary residence, usually the rate's a little bit lower and you only have to put what minimum 3.5, 5% down.
Exactly.
That's a huge
Yeah.
savings
And
in cash.
oh yeah, and that's the way that my wife and I personally have always done it. We buy a home; it's our primary home. We'll live in it for a couple of years, turn it into an investment property, buy a new primary home, and you hit it right on the head. The interest rates are lower for primary homes. Down payments are lower for primary homes. So it's a much easier way for someone who wants to get into real estate investing to be able to do it rather than coming up with 20 or 25% down payments every single time. That's a lot tougher, right?
Yeah.
And it's a legal way. It's you're perfectly good to do it. You're not breaking any rules or anything. You're just taking advantage of the way that the system's structured.
Yeah, I like 5% a whole lot better than 25%.
Exactly. And even rate wise, right? If you look at the comparison of a primary home to an investment property, interest rate on an investment property is normally 0.5% to 1% higher. And that's a significant difference.
Yeah. And what I've found is I've seen rent rates still going up. And if all the investors that are buying homes, if they're not using cash, they've got to charge rent based on on the investor rate, right? The investor loan. So if you've got your primary loan locked in, I've seen, 100, 200, little extra cash goes a long way while also getting the house paid down.
Oh, yeah, exactly. Yeah, you're winning on both accounts, and even from a tax standpoint, right? The way that kind of our tax system's set up is it rewards investors, right? And now some things that may not have been tax deductible on your primary home are now tax deductible on that investment property. So it can help be a tax shelter for a lot of folks too, right? And I think a lot of people may not realize that is that it can be different itemizations and deductions.
Yeah, I've got one of my friends in Tucson, Arizona. He's in the real estate industry, and about every year he'll buy a new house, and he doesn't even care if it cash flows because it helps him on taxes. He's look, the new renter is going to pay it down. It saves me. I'm going to spend the money in taxes, so I might as well just buy a house. And now he's sitting really pretty. Equity's going up, and he's got low. He's been doing this for a long time, and so the tax advantages are just mind-boggling.
Oh yeah, yeah, and the other benefit of that is you can depreciate stuff. You can write off all the interest, typically property taxes, even if you don't manage it yourself. A lot of people don't realize that because for years I was managing our properties and I was going out and fixing this toilet and mowing that, and like, why am I doing this? Because if I pay someone to do it, I can write that off.
Right.
Right? Let's pay someone else to do it so I can focus on other things that are actually making me money, right? Not wasting my time. Um, but yeah, there's a lot of advantages to switching a primary home into an investment property, rather than selling. It's a great way to build wealth.
This has been awesome. What's a great way for people to get in touch with you?
Yeah, yeah. I'm Brett Wilmer at Origin Point. You can Google me and pull me up there, or you can always call me on the cell phone at 615-618-9735 or brett.wilmer at originpoint.com. I'd love to help you out. If you just have any questions or anything I could do, I'm here. That's half of what I do, if not half, is just educating folks and trying to make more people investors and help build their personal wealth. So whatever I can do to assist with that, let me know.
Educating folks and taking care of dogs.
Yes, sir. 5 dogs. One that's scratching at the door.
Yeah, yeah. And what all states do you work in right now?
So I am personally licensed in Tennessee, Florida, Maryland, and Virginia. And I think I will have a pending license in California coming up pretty soon too. Just we've got a lot of folks that are moving back and forth between Nashville and LA and you name it. So I figured might as well get licensed there too. Couldn't hurt.
About time to do that. About time to do that. Awesome. This podcast brought to you by the Realtor Waiting List, where we help lenders get a waiting list of realtors through Duo videos without giving donuts, MSAs, or any of that other Zillow leads. Thanks again, Brett, and we'll talk to you guys next time.
Awesome. Thank you, Charlie.